In any market, there's this crucial relationship that honestly most people just glance over, and that's the link between price and volume. Today, we're going to decode that. We're going to pull back the curtain and see what's really driving the numbers on your screen.
This quote just nails it, doesn't it? I mean, a rising price looks fantastic. We all love to see it. But what if there's no real power behind that move? Is it going to last? Volume. Volume is what tells you if there's real conviction there or if it's all just smoke and mirrors.
Because that's exactly what it is. Looking at a price chart without looking at volume is kind of like watching a movie on mute. Sure, you can see what's happening, but you're missing all the context, the intensity, the real story. Well, in this explainer, we're turning the sound way up. Okay, so let's start with this idea. How exactly can price lie to you? Well, it all comes down to the force behind the move. A price can get nudged up or down on really light activity, but those kinds of moves, they just don't have staying power. Here's the best way to think about it. Imagine price is a rocket, and you can see its altitude, how high it's going. But volume, that's the fuel in the tank. Now, if you see that rocket climbing higher and higher, but you know the fuel gauge is blinking on empty, you know that's not going to end well, right? It's the exact same thing in the market. A strong trend needs strong volume to keep it going. So, how do we actually measure this fuel in a simple way, something we can just see on a chart? Well, that's where our main tool for today comes into play. The on-balance volume indicator, or as everyone calls it, OBV. And this thing has been around for a while. It was created way back in 1963 by a market legend named Joseph Granville. It's a beautifully simple idea. Its whole job is to keep a running tally of volume, to see whether the real pressure is on the buying side or the selling side. And the math behind it couldn't be easier. Seriously, it's just a running total. If the price closes higher for the day, a green day, you take all of that day's volume and you add it to the running total. If the price closes lower, a red day, you subtract that day's volume. That's it. Over time, this creates a line that shows you the cumulative flow of money. And here's what it looks like in the wild. You've got your price chart up top, and then below it, you see that gold line. That's the OBV. Now, here's a key point. The actual number, the value of the OBV line, totally meaningless. Don't worry about it. What we care about is the direction. Is it trending up? Is it trending down? And most importantly, is it doing the same thing as the price? And that question leads us to the single most powerful way to use OBV, looking for something called divergence. This is when the price and the volume start telling two completely different stories. And that is a massive clue about what might be coming next. See, this is the core idea behind the whole indicator. Granville's theory was that the smart money, the big institutions, the insiders, they make their moves first. Their huge buy and sell orders show up in the volume data before the price really starts to take off. And OBV is designed to help us spot that early activity. This slide just lays it out perfectly. On the left, that's what you want to see in a healthy trend. The price is making higher highs, and look, the OBV is right there with it, also making higher highs. Everything's in sync. But look at the right. This is divergence. The price is pushing to a new high, but the OBV is lower. It's not confirming the move. That's a huge red flag that the fuel is running out on this rally. And this works both ways, of course. You can have a bullish divergence, which is when the price is falling or going sideways, but the OBV line is starting to climb. That's a hint that smart money might be quietly buying up shares while everyone else is panicking. Then there's the opposite, a bearish divergence. Price is hitting new highs, but the OBV is flat or falling. This suggests the big players are quietly selling their shares to unsuspecting buyers at the top. And here's a classic real-world example for you. Before Bitcoin went on that legendary run-up to nearly $20,000 in 2017, traders who are watching the OBV noticed something interesting. For weeks, while the price was just chopping around, the OBV line was steadily climbing higher. That was the clue. The big money was accumulating, getting ready for the massive breakout that followed. All right, now let's be real. Like any indicator, OBV is not a magic crystal ball. It has its weaknesses, and sometimes it can give you a bad signal. So knowing when to be skeptical is just as important as knowing how to read it. Because nothing is. No single indicator is a silver bullet that works 100% of the time. The markets are just too complex. So let's quickly break down the main reasons OBV might lead you down the wrong path. So there are really three main culprits to watch out for. First, some crazy news event or a flash crash can cause a single day of insane volume. That one day can throw the OBV line out of whack for weeks. Second, especially in less regulated markets, you can have fake volume or wash trading, which makes the OBV totally useless. And finally, you have to think about whales. A single huge trade can move the OBV, making it look like a broad trend when it was really just one big player making a move. So how do we protect ourselves from this? Well, first rule, never ever use OBV by itself. Always look for confirmation from other tools like an RSI or a MACD. Second, zoom out. A weird signal on a 5-minute chart might just be noise that disappears completely on the daily chart. And finally, try to stick with assets that have a ton of liquidity and reliable data, where one weird event is less likely to throw off the whole picture. Okay, so let's bring this all home. The goal here isn't just to get you to add another squiggly line to your charts. It's to get you to fundamentally change the way you look at price itself. If you remember just one thing from all this, let it be this. Volume is the cause, price is the effect. That's the relationship. When you see a divergence, what you're really seeing is a crack forming in the foundation of a trend. The price might not have reacted yet, but the underlying pressure, it's already shifting. So here are the big takeaways. 1. Price movements by themselves can trick you. 2. OBV lets you peek behind the curtain to see the real buying and selling pressure. 3. Learning to spot those divergences, that can be your early warning system for a big change. And 4, and this is crucial, always use it as part of a team, never as a solo player. And that's really the final thought I want to leave you with. Once you start paying attention to the fuel that's driving the market, it really does change your entire perspective. You're not just watching lines on a chart anymore. You're actually seeing the raw forces of supply and demand playing out in real time.